I'm here with Patrick Jankowski, Senior Vice President of Research with the Greater Houston Partnership. Good to see you.
Thanks for having me.
We're going to talk a little bit about what the drop in oil prices has done for the energy industry here in Houston, and particularly the labor force. What have you seen in terms of job losses, and what are you projecting going forward?
We're starting to definitely see a slowdown in job growth in Houston. March was one of the weakest months we've had on record. We're still creating jobs, but not at the pace we've created in the past. We thought we might create as many as 63,000 jobs this year. It looks at the rate we're slowing down, we'll be creating substantially less than that. There'll still be job growth, but not at the rate that we've enjoyed over the last few years.
Has Houston seen the brunt of job losses, or is that still to come?
No, we're still going to see it. You're going to start seeing more job losses after the first quarter earnings reports come out. There's a lag in the way the data has gone. The most current data we have is March data. And so once we get the April, the May, and the June data, we'll have a better idea. We really won't know until this summer, until July or August, just the impact that the drop in oil prices is going to have on employment.
What is your expectation in terms of how the job losses will compare to other previous oil market downturns?
This one won't be nearly severe. This is definitely not going to be a repeat of the 80s. It won't be a repeat of the Great Recession either. It'll be somewhere in between. The partnership's forecast, we expected a loss of about 10,000 jobs in energy this year. Probably need to revise that up, but we still will have growth in other sectors of the economy.
And Houston, the economy here is a lot different than it was in the 80s. It was much more dependent on oil.
Very much so. Also, we're more a white-collar town now than a blue-collar town. Back then, we were known for what we built. Now we're known for the decisions we make. Much more focused internationally. If you go back to the 80s, we only had about 1,800 companies in Houston doing business globally. The last survey the partnership did, we had 3,500 companies doing business globally. We had 50 consulates in the 80s. We have 92 consulates now. It's definitely, and we're much more focused on healthcare and electronics. It's definitely a very different economy now.
Will we still see energy companies invest in Houston even as they're cutting back jobs, or do you think there will be a cessation of investment?
Well, there's going to be a pause in certain sectors. We're still seeing a significant amount of construction and investment going on in downstream, a lot of construction in ethane crackers and plastic plants and refinery upgrades to take advantage of the cheap and abundant natural gas and to take advantage of the opportunity to export refined products. So on the downstream side, yes, and the upstream, we'll probably see a slowdown in that for a while.
And you've seen these ebbs and flows in the energy business here in Houston. What is different about it this time?
It's interesting that you bring that up because I've been here in this economy since March of '81. A couple things are different. For one thing, there was a lot of hubris in the 80s. There was a lot of we could do no wrong, it was going to go on forever. This last time, when the oil prices were at $100 a barrel, people were wondering how long is this going to last before it slips again. Back in the 80s, people thought it would go on forever, so people didn't get so far out over their skis. We didn't overbuild in office space. We built 72 million square feet of office space from 82 to 86. This last go round from 2010 to the end of last year, we only built or started 33 million square feet of office space. We're not overbuilt in that. We overbuilt in housing in the 80s. Right now, housing is still in short supply. We have a 2.8 month supply of housing in the market, according to the MLS, when we really should have a 6-month supply. In the 80s, people probably don't know this, but we did not have interstate banking. Banking was confined inside the borders of Texas. Now we have interstate banking, and we have places like JP Chase and Comerica and Bank of America and Wells Fargo. So yeah, there are probably some bad energy loans out there, but they're not going to bring down the banking system the way the bad energy loans brought down the banking system in Texas in the 80s.
Patrick Jankowski, good to talk to you. Thanks for your time.
Thank you very much for having me.